we've been saying a while how, we're fools. We're not macro people. We don't make macro calls, but we know economics, and we know that current oil prices, it is not incentivizing anybody to find more oil, which relates to our first story today. But, I mean, something's going to have to happen to change the current status quo. Recently, Bloomberg put out an article that, in so many words, basically said that when the market rebounds, it could rebound big. Why did they say that?
Well, when we always talk about supply and demand. It's kind of the overarching theory when we talk about oil is, how too much or not enough supply. And the theory is that there is massive underinvestment in the oil and gas industry right now to maintain current production levels. You have the natural decline of oil reservoirs wherever you go. It can be very high in places like shale where it's up to 60-70% annually, or it can be very low. It can be, on average, globally, natural decline rates of oil reserves without any maintenance or repair or trying to, bump the numbers, it's about 9%. So,
which the world currently produces, 93, 94 million barrels a day. So if everybody stopped spending this year, it would drop to the high 80s next year.
Right.
I mean, stop me. Yeah.
Even less. I mean, you're looking at basically on any given year, we have to find and replace somewhere in the range of 5 to 7 million barrels per day of just wells drying up to kind of keep pace. And at the current investment rate, we're underinvesting in that level. We're not. If you look at the amount that's being spent on exploration, the amount that's being spent on production and development, not only are we seeing a production decline, but if you kind of use that gauge of the underinvestment all the way across the value chain, we're looking at several years of underinvestment that could lead to production declines. So if that were to happen, once those kind of the overhang of oil starts to clear, the inventories, the excess production today, bringing Iran back into the fold, and all of these things that people have been terrified about in the market of, it's going to kill oil prices and bring it down to $10 a barrel. Once all of those things are reintegrated and kind of renormalized and brought into the fold, then we're going to be looking at the situation and say, holy crap, we haven't been spending enough in this industry, and we're going to be on a shorter. Our production is going to look a little low, supply is going to look short, and then obviously prices follow that, and then we start to get the natural cycle of things recycling itself.
And not only that, but we all know that markets tend to overshoot, and they probably overshot to the downside, and in order to get more oil on the market, if and when we find ourselves short of supply, it just doesn't seem inconceivable to me that, I don't know, speculators on the New York Mercantile Exchange floor buying all these futures and stuff would overshoot a little. So,
well, and again, one of the things that's always been an issue for a long-term investor in this space is being able to kind of sift out the noise when it comes to these sort of things. You're looking at futures trading 6 to 12 months, and everybody tries to make these projections years out in advance when you look at what you call the forward curve of oil, it's never right.
Right.
There's way too many factors that go into the daily price of oil.
Really
there's thousands of factors, and on any given day, those can change. And normally what happens with that is that you take that forward curve and light it on fire and start again tomorrow.
And we want really quick before we wrap up this section. One of the executives we met when we were in Houston, and I keep mentioning that trip this show for some reason, was they had a chart of the forward futures curves at various points in oil history for the last 10 or 15 years, and it was hilarious and laughable how wrong it was.
Yeah,
it was staggering.
The 2008 forward curve said that oil was going to be at $220 a barrel today.
Then the financial crisis. It's just, so hilarious. Cool.